The Nifty Bank is actually seeing support at 54,600 for the second straight day, and the major resistance is at 55,600. I just want to pull up the intraday chart for the Nifty 50 again, because while we were speaking about all of this, it continued to climb, and it is trading 283 points higher above what has become a very critical resistance level in the recent past at 24,300. So the question to Nilesh Jain, who's joining me right now, of Centrum Broking, is with the blitz that we're seeing right now, Nilesh, and there's no other way to describe it. It's a blitz, and we've run very quickly to that 24,300 mark. What are the fresh levels that you would look at for both the benchmark Nifty 50 as well as the Nifty Bank, which seems to be in a tearaway hurry today?
Very good afternoon, Alex. Absolutely, a very strong rebound that we have seen today. I think it is more sort of a giving confidence, because now today the Nifty has taken support exactly at its 21 as well as 50-day moving average. So cluster of support at today's low somewhere around 24,050. And from now here on, we are expecting a move towards 24,500. So another 200 point uptick is something that we can expect in a very short-term time frame. So it's a buy and decline now. We are getting more confidence because the volatility index in India is cooled off sharply by 6% today. And for the first time after a long time, it has slipped below 17. So that is another thing that is giving more confidence. Coming to the Bank Nifty, after long underperformance over Nifty index, finally it has shown a big outperformance over the Nifty index, and also making an attempt to cross 56,000 as well. That's the 50-day moving average for the Bank Nifty in the spot level. So overall, Bank Nifty also looks strong for 56,500 to 57,000. So we are expecting a gradual uptick to continue towards this 200-day moving average that is placed somewhere around 57,200. So that will be the next target in the May series that we can expect. So both Nifty and Bank Nifty look strong, but yes, broader markets are looking more stronger than the benchmark indices. Mid-cap index is merely few hundred points away from a new record high, and the kind of rebound that we have seen in the small cap index, that is also giving more confidence. So overall, it looks like a broad-based buying that we are witnessing, and it is likely to be a sustainable one.
Just as we're speaking, the peak has been found, and it's just gone a slight bit below that peak, right? So we've broken below the 24,300 mark for the benchmark Nifty 50. But your point on the broader markets is well made, Nilesh, because if you look at April as a whole, then you see 17% gains for the small cap index, about 13% for the mid cap index or thereabouts, and you built on that in the recent past with an outperformance in the broader markets, right? So there you go. So 1 month, of course, does not capture all of April, is up about 15.5%. But let's talk about individual stocks, and I did not bring you those. As I look at the 500 stocks of the Nifty 500, there are just over 100 declines. But the key gainers, let me highlight those for you. You have Alkyl Amines, which is doing particularly well. You have Wockhardt, you have Valor Estate, you have Coforge, that is reacting to numbers and continues to gain ground. You have Tejas, you have eClerx, and you have SRF, which is our selection for the stock of the day, and we'll come to that in just a bit. Among the key losers, you have not too many in the way of very, very big losers. You have Schneider Electric, that's losing about 5%. You have Vardhman Textiles, you have KPIT Tech, Ather Energy, all losing over 4% and less than 5%. You have Credit Access, that is seeing a little bit of money being taken off the table after the sharp rally that it saw in the recent past. But I've listed out several stocks for you, Nilesh. Is your pick for today among those, or is it separate?
Well, Alex, a very good setup across the broader markets we are witnessing today. So slightly different set of stocks that I have. First of all, within Pharma pack, we have seen a very strong momentum. So we are very much constructive on Pharma space. Mankind Pharma, this particular counter, has given a very good breakout today. In fact, yesterday as well, we have seen a very good setup. Today, on derivative front, we have seen 4% OI addition as well. So we are getting more confidence on derivative front as well. With this kind of a breakout, we are expecting a follow-up on the upside towards 2450 to 2500. These are the two targets on the upside, and 2295 somewhere around today's low will be the stop loss. So Mankind Pharma will be first preferred bet. Apart from that, if you see the other stock that we are liking is Shriram Finance. So NBFC space will be another space where we may see the momentum coming back. So Shriram Finance, we are bullish for upside target of 1020, 1040 with a stop loss below 978. Shriram Finance is also a buy. And lastly, one more counter that I have is MCX. So Bombay Stock Exchange is trading at all-time high, and MCX is likely to follow that momentum on the upside towards 3200. That's again a positional target. So one can keep a stop loss below 2900, and MCX is also buy.
Now, of course, at this point, it's conjecture as to why the market is rising as much as it is, but there is a possibility that a news report that was put out just 16 minutes back, from what I can see, by Axios about the US-Iran conflict could have had a bearing in turning the tide. Because if you look at the intraday chart for the Nifty 50, you will see that that big spike took place about 20 minutes back. Now, what are they saying? And it's a pretty simple update for you. There is a possibility that the White House believes that it is getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed nuclear negotiations. They have quoted two US officials and two other sources that have been briefed on the issue. It must be stated very clearly that NDTV Profit or the NDTV Group don't yet have any confirmation of this story, and therefore it is not verified. The feeling at this moment is that the market could be reacting to the possibility that the US-Iran war, the tensions might be dissipating. We just had Brent crude on the screen right now. Let's pull those up again, because earlier today they were already reacting, or rather last night, crude oil prices were reacting to an update by President Donald Trump that said that Project Freedom would be put on hold in the near term, for a little while, because there is significant progress that was made, according to him, in the talks with Iran, and they were moving to a conclusive agreement. So Brent crude now trading lower by as much as 6% at 103, 103.5, and moving lower very, very quickly. I just want to also pull up the rupee if we can. And if we can pull up the exact rate as things stand right now, you will also see a sharp reaction in the Indian rupee. Remember, for the rupee and the chart that you're seeing on the screen, down is good. That means that it is appreciating against the US dollar, 94.68 as things stand right now, and a pretty sharp move, a 0.6% move for the USD INR pair in a day is a pretty sharp move. Nilesh, if you have a view on crude oil prices or the Indian rupee, if you can step in and perhaps give us a check on either of those two.
Right, Alex. So we have been tracking both the commodities. So first of all, USD INR, if you see, it has formed somewhere kind of a double top pattern on technical front, where 95.30, 95.40 has acted as a very strong resistance, and it has also gone into extremely over territory. So this kind of a profit taking was very much likely. So we may see further retracement to continue on the lower side towards 94.2 to 94. And it may test its 21-day moving average that is placed at 93.81 in the best case scenario. So overall, as of now, at current level, we expect some bit of profit taking to continue. So rupee may appreciate further. Now coming to the Brent crude, similarly, we have seen multiple tops at $120. If you can pull up, last 2 months chart, you can clearly see at $120 to $125, that was a strong resistance zone. Multiple tops can be seen at that particular range. So now we are expecting a follow-up more on the lower side to continue towards 102 to 100, and in fact $100 is something that we may see going forward. And if it breaks below $100, then next target straightforward could be at $90. So that will be further positive development we may see going forward, provided it should break $100 support on the lower side.
Sequence of events that you need to pay attention to all of this week. We've been focusing more on geopolitics than perhaps when you saw that bit of a lull in the conflict between Iran and the US. Earlier in the week, you had news of certain drone attacks and certain increase in tensions. And subsequent to that, you had statements that were made by Iran officials as well as the US. Iran, for example, talking about the fact that it believed that the US should not be drawn back into a conflict. Remember that this took place just a couple of days back. And since then, you had Project Freedom that was announced. It was said that the blockade would remain in place, but the US would help vessels that were stuck in the Hormuz Strait to get through and to pass through. The latest update, of course, last evening was that Donald Trump announced that they would put Project Freedom on hold. There was also a statement made by other officials of the Trump administration saying that a deal could well be nearing closure. And of course, Pete Hegseth, talking about the fact that the truce was very much continuing between Iran and the US. The latest, of course, is an update from Axios. Remember, we've told you that this is not confirmed. It is a source-based report quoting multiple sources of the US administration and White House, saying that there is a possibility of a memo or of a one-page document and an agreement being signed by the US and Iran. Devin Choksi joining us right now to talk about the markets and everything else that is happening. Devin bhai, thanks so much for taking the time. We're sticking with this geopolitical story because it is the biggest story as things stand right now. Between 16 and 20 minutes back, there was this report that came about saying that there is a possibility of a deal between Iran and US very soon, and the markets have really zoomed from that point. Would you buy into this, or would you hold out and wait for an official announcement to come through?
Yeah, Alex, good afternoon. Well, I think the deal is definitely going to be taking place. How soon, how fast, and in what contours I think this is going to happen, I think is something which is a subject matter of guess. And that's where probably I think the market is either excited or nervous on a given day. Today, I think what I would like to think little differently, that assuming that the deal is getting through, if not today, tomorrow, the next thing that I think one will have to be extremely careful about is how exactly are we going to be positioning your investment in this quarter. See, the last quarter results have already given good amount of confidence about Indian corporate sector producing better numbers. However, in the first quarter, that is the current financial year, the first quarter, we are likely to see, I think, a severe amount of challenges in various companies and their books, etc. Those businesses which are dependent on global supply chain mechanism, the logistic management activity included, I think they are going to be having the first taste of challenge in this particular quarter with the kind of performance that they will be talking about. Already companies have started talking about pain in the high input cost, particularly the commodity prices, including the metal commodity, chemical commodity prices. So they already started talking about, I think, the adverse impact of that. And still the quarter is yet to get over, but at the same time, I think the businesses of the companies, if they are not meeting the kind of expected numbers, probably the market will not be very kind in tolerating the kind of valuation at which I think it has bounced back. So in my viewpoint, in summarization, I feel that I think today we stay in the range between 22,200, which is the low that it has made up till now, and 24,600, 24,800. Okay. In this range, market is tightly placed as I see it at this point.
Sure, of course, Devin bhai. Just want to go through what the details of that story is. And Pramit Pal Chaudhary, South Asia Practice Head for Eurasia Group, joining in to give us the idea. Now, this is what is being claimed, and it is coming in from the White House. The White House believes it's getting close to an agreement with Iran on a one-page memorandum of understanding to end the war and set a framework for more detailed negotiations. They claim that this is the closest they've been to an agreement. So what are the provisions that we know of so far? The deal would involve Iran committing to a moratorium on nuclear enrichment, US agreeing to lift sanctions, release billions in frozen Iranian funds, and both sides lifting restrictions around transit through the Strait of Hormuz. We have to wait and see whether the Iranians respond to this, because we've seen versions of this coming in before. Pramit Pal Chaudhary, just want to ask you, of all of the things that this one-page memo reportedly has, do you think the Iranians will agree to not charging any levy through the Strait of Hormuz and leaving that unchecked? Because that is a strategic advantage they've gained as a result of this war.
So the most likely way that would be handled, the Iranians have already passed a law in their own parliament, in the Majlis, saying that they will have the right to impose such dues on any ship that goes in and out of the Straits of Hormuz, and they will share that right only with Oman, which controls the southern shore. So legally, there is no way back for the Iranians. But what can happen is either the Iranians can unofficially say, we won't impose such a due for an unspecified amount of time, calculating that when the Americans eventually pull away and this war comes to an end, they can impose that due anyway, and nobody will really be in a position to protest. Or they can wrap it in a different language. For example, the Iranians have also said they expect to be paid a war reparations for the damage that has been done to them during the war. And they could therefore theoretically put those dues under a war reparation structure, charging the countries like Qatar, Saudi Arabia, and UAE directly and say, you pay it to us in case your ships don't get. I will expect Iran to still demand some kind of money, but it can be wrapped up in a manner that is not of the same language that the Americans are saying. So the principle that the Straits of Hormuz remains open as an open international maritime corridor can be preserved.
Pramit, hi, Alex here. The other sticking point, and something that you've heard about in fits and starts from the Iran administration, I'm calling it the administration, but the spokespeople, shall we say, of Iran, is the nuclear deal and the lack thereof, and their unwillingness to surrender the enriched uranium that they have. So where do we go on that front? Because they seem to have been unwilling to budge on that point.
Well, what is interesting, if this one-page memorandum is anything to go by, the Americans have actually walked back from their original position. So the first issue was the enrichment question. America said, you must commit not to enrich uranium for 20 years. Iran had said, we are prepared to commit to 5 years, which is exactly what was under the original JCPOA agreement. In this memorandum, it seems the Americans have said, why don't we go for 12 years? At least 12 years, preferably 15. Obviously, Iran will probably go for the shorter number. But you're seeing the Americans effectively walk to a mid position between the 5 and the 20 years. And so I think that's something the Iranians can live with. Not least because, especially if this does not come with any monitoring system or verification structure, it after a few years, Iran can really do whatever it wants. So I think we're looking at a compromise in which 10 years perhaps is what the Iranians will offer. But the Americans have clearly walked back from that original 20 years by quite a bit.
Okay, just one more point, Pramit. The fact is that we're hearing only one side of this, and I want to make it clear to our viewers, this is an Axios report that the street is responding to. And Axios, in its report, is quoting officials from the White House. There is no official word from the White House yet. Having said that, there is no word at all from the Iranians. And this is what we've seen time and again, right? Bluster and sometimes claims from the American side, and then the Iranians come and say that there's no such thing. How do we know this is not just one of those times?
So what we're seeing, I think, is a very standard negotiating tactic. The Americans have basically positioned themselves by saying, okay, look, this is what we've sent an MOU to the Memorandum of Understanding to Iran. We know that we believe that the Iranian regime is divided between hardliners and pragmatists, so we don't know whether it will be accepted. But what we will do is also leak it to the press. So if the Iranians come back and say, no, this is unacceptable, or come back with a set of demands that of their own, which America finds unacceptable. America can at least go to the public, to their public and to the international community and say, look, we made major compromises. The people who are being difficult about this are the Iranians, not us. And that's basically what they're positioning themselves as. This is, as you said, this is not the way diplomacy is normally run. Normally, you try to get everything settled behind closed doors. But in this case, given that Iran and America, the distrust levels are so high, they do not have diplomatic relations. Iran will be nervous to send even a foreign minister to meet an American foreign minister for fear he'd be assassinated. Given the state of relationship between, this is basically how it's going to play out. And finally, you have a President Trump whose concept of diplomacy is, should we say, very different from what the norm is.
Yeah, different is one way to describe it. Thanks so much for taking the time, though, Pramit. Always a pleasure speaking with you.
Thank you.
All right, I want to go back to Deven Bhai on this. Deven, you were listening to this conversation, right? A geopolitical expert talking about it, and it seems like this is a move towards a deal, as you were pointing out. But the question is, what should your response be? And I asked that question to you at the start, but I want to refine that just a tad bit. You have crude sensitives. The top gainer on the Nifty 50 is Interglobe Aviation. It's up, 6% at this juncture. So the horse has already bolted. Is there any point jumping on it right now? You could well be in a situation where you're caught on the wrong foot.
Yeah, Alex, I think that's what the main point is, that we all believe that sooner or later, I think this situation is going to ease out, some agreement will take place, and I think the market will remain excited. I would like to believe that I think that excitement is not going to be permanent. It is going to be probably an event-driven excitement. The reason for which I think I'm saying this is because in this particular quarter, the reality check comes in. The corporate earnings are not going to be reflecting the kind of values that market is right now assigning to some of the stocks. And that's where we are going to see the challenge. Even if we want to believe that tomorrow onwards, everything will become normal, as far as I think the problem with the Iran and the other places is concerned, my still belief is that I think it's not going to get normal for the business. Business will take time. And that's where probably I would like to buy into this market during the correction. Having identified good opportunities and understanding the businesses at a right price, right time, I think one will like to buy. Now, the question will arise that I think we're going to sell at that point of time that you will buy. My take is that I think those who have actually bought it at a lower levels, they are right now also booking profits. So that is a good time to, I think, see the correction in the price. And that's where probably I think would like to buy some of the good quality stocks. Not in hurry at all, at least at this point of time, unless I think the stock is a compelling selective story.
Okay, Nilesh, I just want to understand from you, what is the Nifty position right now? Because if you think about it, this is what's been holding back, right? And having said that, we don't know if all of this changes because these things tend to change quickly. But as of now, as of the levels that you're seeing and the strength that you're seeing in the Nifty and Bank Nifty, please. You're on mute. Yeah, you're on mute. Yeah, there you are.
Right. So in last 6 to 8 consecutive session, we have seen some bit of profit taking that is coming back in the specifically in the second half of the session towards the closing hour. But today the case seems to be different. If Nifty manages to close about 24,300, that will be considered as a positive close. Then probably we can expect a short covering rally towards 24,500 to 24,600. These are the levels that we are expecting in the Nifty on immediate basis. So today's close, which probably we might see that closing about 24,300, and that will be considered as a positive close. And given the kind of a setup we are witnessing on India VIX, which has slipped below 17 after a long time, so that is also giving more confidence. And given the kind of derivative data we are witnessing, a lot of call writers were active at 24,300, and they might run for the cover now, and we may see a short covering move on the upside to continue. Now coming to the Bank Nifty, similar to the Nifty, it is important that it should close above 55,800. That's the 21-day moving average. And if it breaks above 56,000, that will be another confirmation that we'll be getting on the technical front. And target for the Bank Nifty now comes somewhere around 56,500 to 56,800. So the setup on the Bank Nifty also looks strong. And given the kind of outperformance we are witnessing today, we may see a huge amount of short covering in the banking space, specifically index derivative counters like HDFC, ICICI, and Axis Bank. So these are the three specific banks that we are keeping an eye on, and we remain bullish at current level in the Bank Nifty as well.
Okay. Picks that you would look at as this moves, how would you look at, say, an ONGC? How would you look at an Indigo? How would you look at an Asian Paint, some of those crude sensitives, Nilesh?
Well, Tamanna, as far as oil upstream companies are concerned, we have already seen a very good momentum in the stocks like ONGC, Oil India, and Coal India. But now I think we may see some bit of correction out there. The focus will be on crude sensitive stocks which might benefit from the falling crude oil prices. So first of all, Indigo, the setup has turned strongly positive after today's move, and we are expecting a follow-up on the upside to continue towards 4,700 to 4,800. So setup looks positive. If somebody is already holding the long position, can stay put, keeping a stop loss below 4,400. And major trend reversal can be seen across all OMC stocks. So specifically, Hindustan Petroleum is something that we are liking at current level as well. After a spurt of close to 7%, there is still upside room left towards 425 to 430 on the upside. So yes, all the stocks within OMC space, HPPP, ISC look strong. Keep an eye on aviation space, specifically Indigo. So these are the stocks that we remain positive for further momentum to continue.
Okay, David Roche, strategist at Quantum Strategy, joining us right now. David, thanks so much for taking the time. Markets in India and in fact across the globe reacting to this Axios report that is quoting a number of sources, some of them from the White House purportedly. And they're talking about the possibility of a one-page memo, a deal to be signed between Iran and the US. And some of those provisions talking about the easing of restrictions of travel between on that Strait of Hormuz. What do you make of this?
I respectfully say that this is a press media report, and I have the greatest respect from my colleagues in the media, but I don't have a lot to go on as regards any factual evidence for a deal. However, what I can do is tell you what I think this would mean if it were true. You cannot settle the conflict which President Trump has started in the Gulf with a one-page memo, because it will decide nothing and put all negotiations out in the future, which leaves us in a worse position than when he started this war. So any one-page memo which says Iran is going to do this or going to do that and the Americans are going to go home is effectively a defeat. It is nothing to celebrate. Why? Because what matters to you and me is whether oil moves. And a one-page deal where the Americans go home will simply say that Iran remains in charge of the Gulf. And then at least 50% of the oil will not move, because Iran has plenty of enemies among the Gulf states and others, which it will prevent using the Gulf for shipping purposes. So it will not settle the problem economically for you and me, and therefore not for markets. So I would say to you, hold your fire. Don't get carried away by markets which were already so frothy and are now blowing even bigger bubbles, because any quick fix to the Gulf will actually be a quick defeat for Trump. And that will leave what matters to us, oil, in as much danger or more than before.
Not to be facetious, David. It depends.
You never are facetious.
It depends on the size of the text. You can probably fit quite a bit on a page. But having said that, the crude oil prices have come off quite substantially, and Brent crude at 102 or thereabouts, where a couple of days back it was much higher. It was 115 plus. The oil market's also taking notice, David, or would you say that this is simply paper crude and is not indicative of what the real situation is?
It's not indicative of the real situation. Brent is a paper transaction. It's an investor vehicle. If you go down and try and get immediate delivery of oil, whether it's 40s or Brent or whatever, you will find that you'll be paying 30 or 40% above these rates. And the reason for that is very simple. with the entire Middle East network for exporting oil, including the pipelines and the Red Sea, being closed down, we are short of 23 million barrels of oil a day. And that means that global inventories are falling and people are scrambling in the countries where the inventories are reaching critical level, the EU, Australia, India. People are scrambling to get oil at any price. And that's the price that matters. So don't be distracted by what traders are doing in financial instruments about oil. Look at real-time deliveries.
David, so therefore, and you've identified, I think very aptly to say that this is not going to be solved by a one-page memo. So therefore, from your perspective, there are a couple of sticking issues, right? You talk about nuclear enrichment, you talk about control of the Strait, and you talk about reparations that are being sought by Iran. From your perspective, what will be needed for a conclusive agreement to be signed?
Oh, I think the only conclusive agreement which the Iranians are prepared to sign, and after all, you have to say, what are the Iranians prepared to sign? With the IRGC hard line in control, the only conclusive agreement that they're prepared to sign is a withdrawal of the Americans, not only from the Gulf, but from the Gulf states and surrounding states, an acknowledgement that they are in charge of the Gulf, which they, by any international law, are not, and that they can charge what they like to let whom they like through the Gulf. That's the deal they'll sign. And it's not the deal which anybody in their right mind seeking to solve the problems that we are dealing with, which is whether oil will move or not oil, they could not possibly sign this. But that is not what it's about. You see, you're asking me who would sign a deal which settles the issue. And I will say they will sign a deal which does not settle the issue, because Trump wants out because people see his policies as a disaster and the midterms are coming up, and he's prepared to get out at pretty well any price, I believe. And the Iranians want to keep the control which they've got, which is they lost the war, but they won the strategic battle for control over the world's oil supplies, the choke points, the Gulf of Hormuz, etc., and the Red Sea. And they're not going to give that up. Why would they give it up?
That was exactly my question. That was exactly my question. Why will they give that up? Why will you give up a strategic advantage that you've been handed? But then something's got to give, right? Otherwise, this blockade continues. David,
what they reckon they'll give is they reckon Donald Trump will give because he wants to go home. That's what they reckon. Now, whether they actually get to that point or not, we'll see. But why on earth would they give up? What has changed?
Yeah. David Roche, thank you so much for speaking with us. Just a quick question with Devin Bhai before we wrap up this segment. Devin Bhai, is there a strategic re-look at opportunities if this war is truly ending? Would you look at a portfolio reshuffle in earnest and some stocks which now set to benefit?
So, Tamanna, a lot depends on how exactly we see the commodity prices settling. Particularly, I am looking more at it because the India economy on a consumption side is a fantastic roadmap. So I think there is no second thought on that aspect. In fact, sooner the war-related uncertainties goes away, I think better it would be for the companies in particular, because I think they would be in a much better position to execute. The current challenge is related to the pricing pressure due to the commodity prices. And if that pressure is coming down in some systematic manner, then probably I think market will look ahead with a larger amount of confidence. At the same time, I think some of the significantly subdued stocks like L&T, where probably we see the opportunities actually, I think, becoming bigger, but for this uncertainty at this point of time on execution. I believe that I think such kind of companies should be considered in the portfolio because I think when the tide turns for better, I get at this point of time, you are likely to see the better appreciation from some of these companies which are better down at this point of time.
Okay. Thank you so much, Devin Bhai and Nilesh, for speaking with us. David Roche will take a very short break. We're coming back with a crude check. We're speaking to experts on crude. We're getting you BTST ideas. This is turning out to be an exciting Wednesday close. How should you make the most of it? Are you making sure you're not caught napping when this finally ends? Look at that spike on the Nifty. The broader market's showing even more strength. We're coming back with all of that in just a second. Don't go away. Okay, it's becoming a wonderful Wednesday this close. Alex, how quickly things change also tells you how much pent up anxiety there is in the markets, and this is the one thing holding back, because it's not just the Nifty and the Sensex. You look at the rupee,
yes.
You look at European markets, you look at American markets, you look at crude prices, you look at the VIX, all of those indicators telling you that a wall of worry might be fading and will drop quickly.
Yeah, absolutely. And the one asset class that you did not mention, Tamanna, but I think is going to be very critical to watch is bond yields.
Yes.
Because as of this morning, I was talking about it and it's been highlighted. In the UK, you have the 30-year yield that is at the highest level since 1998. You have in the US, the 30-year bond yield that is 15 basis points away from its 23-year highs. And in Japan, that's a similar situation, less than 15 basis points from all-time highs. So there is pressure because there is an anticipation that if this conflict is prolonged, there will clearly be a macro impact. But we've got Shivangi Sarda, analyst equity derivatives and technical at Motilal Oswal, as well as Dharmesh Kant joining us on this leg. Thank you so much to the both of you for taking the time.